Good morning, students. Today we are going to start the next chapter in accounts, that is origin of transaction, that is how to prepare the vouchers, and there are some of the types of source documents also. And in the problems is relating to the preparation of vouchers, and we have to prepare the different type of vouchers. So before starting to do the problems, we should have some of the theory part. We should be very thorough in the theory part. Okay, so first you have to know what is meant by the source document. So in this chapter we are going to study about the source documents and what are different types of source documents. And types are cash memo, invoice, bill, receipt, debit note, credit note, pay-in slip, and check. And vouchers, meanings and definitions of vouchers, and different type of vouchers, and what are the problems relating to the different type of vouchers. Okay, so first we are going to see what is meant by source documents. It is one of the evidence of the business transactions which provides the information relating to the nature of the transaction, date, amount, and who are all the parties involved in the transactions. Okay, so it is the transaction recorded in the books of accounts where they actually takes place, and and duly supported by the source documents. For every transactions there is a document. It is acting as evidence, and adequate, it acting also as an adequate proof of any malpractices which is arises between the parties. It is acting as a very important proof for the transaction. And some of the most common source, the different types of source document, and is a common one we are going to see. These are all the theory part. Okay, so problems only related to the vouchers. So just we have to know what is by cash memo, and what is by invoice, bill, receipt, what is by bill, debit note, what is by credit note, how it is be prepared, what is in the form of debit note, credit note, pay-in slip, and check. Okay, so first one is the cash memo. So when the trader sells the goods for cash, he gives the purchaser a cash memo, and when he buys the goods for cash, he receives a cash memo. It is called as a, and it includes details such as items of the items, how many items was, what is the quantity of that item, and what is the rate, and what is the total amount to be paid. Is all the details are mentioned in the cash memo. And other details are name, address, and some other contact details of the seller and the purchaser. What is the date and time of sale, what is the memo number, what is the amount of discount, what is the amount of tax payable, are also found in the cash memo. Okay, so see that. So it is in the it is a specimen copy of cash memo. See that specimen copy. That is Modern Sunglass Company is the name of the company, and address is there. And in this side, number 24 indicates the memo number. In this side, the date and quantity and descriptions. Description means modern sunglass. It is a 2 quantity. Rate. So rate is per unit. Okay. So 1800 is for one quantity. So they purchase 2. So total number is 2 quantity. So 2 into 1800, 3600. And next one is a modern face and sunglass 1 quantity 1, rate 1200. So 1 into 1200, 1200. So adding the amount, and we have to add the CGST. That is, CGST means Central Goods and Sales Tax, and state level there is a CGST, and Central Service Tax and state. Okay, so both that is 9%, and we have to find the tax and adding the total amount. And some of the notes, that is below that memo, goods once sold or not taken back. This is one of the note, and the manager and the name of the company. This is the specimen copy of a cash memo. And next one is the invoice or bill. What is the invoice or bill? When a trader sells the goods on credit. Okay, so when the trader sells the goods on credit, he prepares a sales invoice or bill. Okay, so it is contains it is a transaction related to the credit transactions. They will prepare a document. It is called as an invoice or bill. It also contains all the details such as terms of payment. So how they have to make the payment, name and address of the seller and the buyer, quantity, quality, rate, and total amount of sale. So the original copy of the sale invoice is given to the purchaser, and the duplicate copy is to be kept for making records in the books of accounts by the trader. Original copy will be with the purchaser and the duplicate copy will be with the seller. Okay, and is maintained as a supporting document for the future references also. And it is a specimen copy of an invoice. See that invoice, that is the name of the company, address, invoice number, 100, date, name and address of the customer, that is the purchaser, the name and address, terms, that is what are the terms. 5% cash discount if payment is made within the 15 days. It is the terms and conditions. Okay, so what is the cash discount? 5% only if the payment is made within 15 days. And quantity descriptions. What is the item? Name of the items, quantity, rate per item, and the total amount. Okay, and in this they are adding the IGST. That is it is also one of the tax. Okay, that is goods service tax. IGST means it indicates the IGST, CGST. CGST is the that is it called GST is a goods and service tax. Okay, goods and service tax. And GST, it is divided into two parts, that is intra-state supplies and interstate supplies. Intra means apart from the state. There is a two type of supplies, that is intra-state supplies. In this there is a two type of GST, CGST and SGST. And interstate supply, there is only one, that is IGST. Okay, so when the supply of goods services takes place between the states, integrated goods and service tax is laid by the central government. So if the goods and services, when the supply of goods and services takes place between the states, within the state, the IGST is amended by the central government. Okay, and it is that is if it is below, that is when the good supply of goods and services not takes place within the state, but it covers the other states. Okay, it is intra state supplies. Okay, so CGST is called as a central goods and service tax, and SGST is called as a state goods and service tax, and IGST is called as a integrated goods and service tax. So there is three type of taxes. One is CGST and SGST is coming under the intra-state supplies, that is the supply of goods and services not only taking place between the state but also covers the all over the country. The tax is levied by the central government, and the tax is called as a CGST and SGST. CGST is called as a central goods and service tax, and SGST is called as a state goods and service tax. And when the supply of goods and services takes place only between the state, it is called as a IGST, that is integrated goods and service tax. It also levied by the central government. Understood? Okay, integrated IGST is called as a integrated goods and service tax. Okay, so in this, so integrated goods and service tax, because see that they are calculating at a 28%. Okay, va? So they are adding the tax amount, and there is also delivery charges, so there is a total amount. Okay, so see that E and O dot E, it is called as a error and omissions accepted. Okay, E and O dot E means errors and omissions accepted. So in other words, there is any error in the invoice, same shall be adjusted accordingly. This is the meaning for that. Understood? See the next one. So there is some of the differences between the cash memo and the invoice or bill. First one is the meaning. That is, cash memo is the document evidencing cash sales and stating the amount which is received from the buyers. Cash memo, it is only the cash sales, but invoice is a credit sales. Purposes, cash memo is used in the case of cash transaction, but an invoice or bill is the case of credit transaction. Proof is evidence for the cash sales and the cash received, and invoice is evidence for the credit sales and the amount due. There is amount still not yet received, it is called as a due. Relations mean no relation between the buyer and seller, but in the invoice it establishes creditor or debtor relationship. Whether if it is a credit sales, there will be a debtor relationship. If it is a credit purchases, creditor relationship. Entry, cash memo, the entry is entered in the cash book because there is a cash transaction, but invoice or bill, the transaction will be entered in the sales and purchase book. Okay, because it is a credit transaction. So next is the stamp. On one revenue stamp to be affixed if the value of sale exceeds rupees 500. Okay, so no requirement of affixing a revenue stamp because it is a credit transaction. Okay, so next one is a receipt. Receipt is also a proof of payment made is which is zero at the time of completion of a sale. So where there is this transaction of sale which is completed, it is one of the proof of payment. Okay, so a sale is considered as complete only when the trader receives the cash from the customer and issues a receipt. Only if the transaction is completed, that is when the trader receives the cash from the customer, he will issue the receipt, and also it contains a name of the customer, date of issue, amount is received, address of the person, and other contact details of the supplier also, that is signature of the authorized personnel also. Okay, the original copy of the receipt is given to the customer and the duplicate copy will be retained by the vendor, that is the person who is issuing the receipt. Okay, so for the vendor, it is a duplicate copy and this serves as a permanent record, and this helps in adjusting the current inventory levels and also helps in recording the financial transaction up to the date, and it is very helpful for the customers. It is a proof of the payment, and it can be employed to claim the refund in case of disputes. If there is any disputes which arises, it can also be used to claim the amount to be refund, and is used to prove the ownership, and it is very helpful maintaining the financial records. Okay, so next one is a specimen of the receipt. So it is one of the specimen copy of the receipt. See that the name of the company, address, a receipt number and date, received with thanks, that is amount, that is the name of the company, and rupees is included, check number or cash, and date which is drawn on in which bank, and the amount of invoice, it is also the invoice number and also the date. Okay, this is one of the specimen copy of the receipt. And come to the next one, debit note. Next one is the debit note. So debit note is also a document which is prepared by the customer in case there are certain goods that need to be returned to the vendor. Okay, so already the goods are purchased from the vendor, and now if the customer if certain circumstances, if there is any damages and if any goods are returned to the vendor, the customer will prepare the document called as a debit note, okay, and for the return goods which is need to be returned to the vendor. Okay, so a debit note indicates that supplier's account is being debited because certain value of the goods are returned by the customer to the supplier. So the value of the goods, the value which is on the goods is no need for the customers to pay the amount for the goods which is returned to the supplier. Understood? So customer is not in the position to pay the amount of goods which is returned to the supplier. So the supplier account should be debited. Okay, understood? So debit note, we have to know for what purpose debit note is prepared. It is prepared by the customer in certain cases when the goods are returned by the customer to the supplier. So he is not liable to pay the goods which is on the value of the goods which is returned by the customer to the supplier. So the supplier account is debited. Understood? So see the specimen copy of the debit note. Name of the company, address, debit number, date, debit note, against. Okay, so the name of which is this debit note is drawn by the customer. So smart and sharp is the name of the customer. See that against Mrs. Well and Good, New Delhi, it is the name of the supplier. Okay, and the address, see that invoice number 345, already there is a credit sales. Okay, invoice means it is a credit sales. Understood? So invoice number, there is a he will receive the invoice number, no? So he have to mention the invoice number 345 being returned for the torches are badly damaged as per the challan number 76. This is the particulars regarding the return of goods by the customer to the supplier. Understood? Rupees 8,600 only. So 8,600 value of goods are returned by the customer to the supplier, okay, due to some damages. Okay, so debit note is often used to return goods purchased on credit. This is the main point. So credit purchases. So who purchased on credit? Smart and Sharp is the customer who purchased the goods from Miss Well and Good on credit. Due to some damages, he is returning the 8,600 value of goods to Well and Good company. So debit note is prepared only when there is a credit purchases and it indicates the return of goods by the customer to the supplier. Understood? Okay. So next one is the credit note. So it's somewhat it is also a commercial document which is issued by the seller or vendor in response to the debit note received from the customer to show that the later account has been credited in the books. So it is a commercial document which is issued by the seller in response to the debit note. So debit note which is received from the debit note is prepared by the customer and it is sent to the supplier now. So now the credit note is prepared by the vendor or the supplier or the seller by giving response for the debit note which is received from the customer. Okay, to show that the latest account has been credited in the books. Understood? So it contains the same date on which the goods are returned, name of the customer, details of the goods returned, quantity, monetary value, and each credit note is serially numbered. So duplicate copy of credit note is retained for the purpose of keeping a permanent record. So it is a duplicate, the original copy will be sent to the customer and duplicate copy will be retained by the seller. Understood? So the customer's account is on the basis of credit note, the customer account is credited in the books. Okay, so see, it is one of the specimen copy of the credit note, and so there is some of the differences between the debit note and the credit note. So first one is the debit note, which is sent to inform the suppliers that their accounts has been debited, and the credit note is sent to the customers that their account has been credited. Okay. So debit note is a note which is prepared and sent by the customer to the supplier to announce that the account has been debited, and credit note is a note that is which is sent by the supplier to the customer that their account has been credited. Details contains details as to why the vendor has been debited and the amount of debit, and why the customers has been credited and the amount of credit. Acknowledgement, it is one of the acknowledgement and requires acknowledgement from the receiver. Debit note is an acknowledgement from the receiver. Okay, the reason is sent by the customer when the purchase or returned, sent by the vendor when the customer has been undercharged. Here also some of the reasons for the credit note. What is the effect? Credit accounts get reduced. The debit note, creditors accounts will be get reduced. In the credit note, debtors account will be get reduced. Okay, and next one is the pay-in slip. What is a pay-in slip? It is one of the form which is available in the banks through which the persons may deposit the money or a check into the bank account. It is a deposit slip. It is also called as a deposit slip. It is a form which is available in the bank when the person may deposit the money or a check into the bank account. So each pay-in slip has a counterfoil which is returned to the depositor, duly stamped and signed by the bank officer. Okay, so this document relates to the bank transactions, only the bank transactions, and details included in the counterfoil of paying or date, account number of the depositor, amount deposited, whether it is in a cash or check, and the name of the account holder. Okay, so see that it is one of specimen copy of pay-in slip. See here, pay-in, that is for example Axis Bank. What is the date, address of the bank, account number, name of the person, details of the cash or check, amount, total, rupees in words, and here number, account number, and for credit of date, name, check details, the bank, branch, check number, and cash deposit in total, and signature of the depositor should be entered and verified. Okay, this is specimen copy of the pay-in slip which is available in all the banks for the persons for depositing the money in the form of cash or check into the bank account. Okay, and next one is the check. Check is the written unconditional order which is addressed by a specified banker, which is signed by the person who has deposited money with that particular bank to pay a specified sum to the bearer of the check or to the person named in it. Okay, so it is one of the written unconditional order which is addressed to a specified banker. Okay, so which is signed by the person who has deposited the money will sign the check with that particular bank in order to pay certain amount to the person who needs the money or to the person who named in it. So a check is a payable on demand. Okay, so that is when it is presented to the bank, we can able to make the payment. And it is one of the specimen copy of the check is paid to person, date, amount in words and in the figures, account number, and the other details. It is the account number. Okay, this is one of the specimen copy of a check. We already see in day-to-day transactions. We are already come across this. That is notice by cash memo, invoice, or bill, debit note, credit note, pay-in slip, check. Okay, and next one is the vouchers. So from voucher only we are going to prepare the problem sums. This includes some of the problem sums. So today's class we will see the theory part. Okay, so voucher is the written document that serves to confirm or witness or vouch for some fact or a transaction. It is evidence for the transactions which is undertaken, and it is a document that shows the goods which have been have bought or services have been rendered or authorities payment, and indicates the ledger accounts in which these transactions have been recorded. So it is one of the written document, and it is one of serves to confirm the transaction, and it is a witness or important fact for the transaction, and is evidence for the transaction. Okay, and there are two categories of vouchers. First one is the we already studied, that is supporting vouchers. We already studied the theory part, no? Supporting vouchers are cash memo, invoice, credit note, debit note, check, and paying slip. And the second one is the accounting vouchers. So the accounting vouchers only we are going to do the problems. Okay. So the accounting vouchers is a voucher is an accounting record of a business transaction that is supported by the various documents, and it is prepared for each separate voucher is prepared for the each type of transaction by the accountant of the business concern, that is specifying the account has been debited and credited. So it is a voucher is accounting record of the transactions by the various document, and is prepared for each transaction by the accountant of the business concern, and for what purpose, specifying the each account whether it is to be debited or credited, and it is to be signed by the authorized person of the organization to denote the witness of the transaction. Understood? So that is some of the differences between the supporting vouchers and accounting vouchers. Supporting vouchers or source document are the cash memo, invoice, paying slip, debit note, credit note, check. And accounting vouchers, there will be credit vouchers, debit vouchers, compound vouchers, transfer vouchers. There is a different type of vouchers. Then we are going to study. Okay. So this is the difference between the supporting vouchers and accounting vouchers. So see the meaning. It is a proof of transaction and serve as a support to the vouchers. But accounting vouchers, accounting records of various. So for each transactions, they have to prepare the vouchers, which is supported by the source documents. And the nature is evidence of the transaction, and accounting voucher is to guide to record the transactions correctly. And purpose is to support the transaction vouchers, and accounting vouchers, the main purpose is to record the transactions properly. Content. Complete details of the specific transactions is included in the supporting vouchers, but in accounting vouchers, the details of the accounts to be debited or credited for each transaction. The details of the account, whether it is to be debited or credited, is included in the accounting vouchers. Okay. So the next one is, see that types of accounting vouchers. Okay. So there are two types. See that first one is the cash vouchers and non-cash vouchers or transfer vouchers. So there are two types of vouchers, cash voucher and non-cash voucher, or it is also called as a transfer vouchers. In cash vouchers, it is divided into two types, debit vouchers for cash payment and credit vouchers for cash receipt. Receipt is the income. Okay, understood? So if there is a cash payment, we have to prepare the debit vouchers, and if there is a cash receipt, we have to prepare the credit vouchers. First we are going to see under the heading cash vouchers are used for recording the cash transaction. Cash, the name itself it indicates it is prepared only for the cash transactions for which the checks are received or issued in connection with the receipt or payment. Okay, so it includes only the cash transaction, whether it may be a cash receipt or cash payment. If it is a cash payment, we have to prepare the debit voucher. If it is a cash receipt, we have to prepare the credit vouchers. First one is the debit voucher. Debit vouchers is also called as a cash for the cash payment. In order to prepare to settle the payment, that is for expenses, salaries, purchase of fixed asset, payment to creditors, drawings, purchase of goods, purchase of investment, deposit into the bank. So any amount which is going outside by means of cash is called as a cash payment, and these are some of the examples, okay, of the cash payment. And for this purpose we are preparing the debit vouchers. Understood? So this is the format of debit voucher. Debit voucher, see that name of the company, address, see it indicates first one is the name and address of the business firm. Second one, see that date of the preparation of the voucher. See the third one, serial number or voucher number, okay. And see the fourth one, see the fourth one, fourth one is name of the account is debited. Name of the account is debited. So see the fifth one, where is the fifth one? Fifth one is the amount of cash paid. So you have to draw like this and you have to prepare the each and every voucher. This is the format. And see the sixth one. What is the sixth one? Narrates and brief description of the transaction, that is details regarding the transaction, that is being the computer purchased and cash memo number. So full details about the transaction. And see the seventh one, signature of the person who prepared the voucher. So signature of the person who prepared the voucher, seventh one. Eighth one indicates the signature of the authorized that is authorized person. So seventh one is the signature of the person who prepared, and eighth is the signature of the authorized person, and ninth one is the source document. So cash memo is a source document, no? So if there is any source document number, it should be included in the ninth one, indicates the source document number. And what is the 10th one? It is document in lieu of supporting voucher. Supporting voucher is called as the cash memo, no? For that we will fix the revenue stamp, okay. This is the format of a debit voucher. So debit voucher is nothing but if there is any cash payment or in the form of expenses, the amount is going outside. Purchase of fixed asset is there will be the amount which is going outside. Payment to the creditor, amount is going outside. Drawings, amount is going outside from the concern. Purchase of goods, going outside. Purchase of investment, cash is going outside. And the deposited into the bank, in this case also the amount is going outside, okay. So next one is the credit voucher. Credit voucher is received only when the cash is received, okay, is prepared. The credit vouchers are prepared when the cash is received. It may be in the form of commission received, interest received. Sale of goods means amount is coming inside. Sale of fixed asset means amount is coming inside. Sale of investment also coming inside. Receipt from the debtors also, cash is coming inside. Withdraw from the bank. From the bank we are withdrawing the amount, so it is coming inside. This is the format of the credit voucher. See that credit voucher, the name, address of the business firm, date of the preparation of the voucher, serial number. Credit voucher, there will be no such revenue stamp column, okay. And voucher number, fourth one is name of the account credited, name of the account credited, okay. So see that if there is a transaction called as goods sold for cash, so which account should be credited? So what is the transaction? Amount is coming inside. Cash, what debit, what comes in? Cash is coming inside. So cash account will be debited and will credit the sales account. This is the transaction analysis. No, we already studied in the last chapter. When the goods are sold for cash, debit part comes in cash. So we will debit the cash account and we will credit the sales account. So in this credit sales. Understood? Credit sales account. So which account is to be credited? We have to write the name of the account which is to be credited and the details and the source document number, and here amount, total amount, signature of the person who is preparing the voucher, and in this side signature of the authorized person. Understood? Very simple. So this is enough for today's class. So just you non-cash voucher is also very simple. It is also called as a transfer voucher. It is also called as a transfer voucher. That is a non-cash vouchers prepared. It is any transaction which is in where the cash is not involved is called as a non-cash voucher or a transfer voucher. That is, it is also called as a non-cash transactions or included in the non-cash vouchers. So in the vouchers there is a two types, cash voucher and non-cash voucher. Cash voucher divided into two types, debit voucher and credit voucher. Debit vouchers related to the cash payment, any payment which is going outside on basis of cash, and credit vouchers related to the cash receipt, any payment which is received by means of cash or entered. And the debit voucher, what account is to be debited, we have to debit in that voucher. In credit voucher, what account is to be credited, we will credit that name of that account. And in the non-cash voucher, only the non-cash transfer, that is the credit sales and credit purchases. That's all. If that is how we can able to understand whether it is credit purchase or credit sales. If it is not indicated, that is it is sales for cash, purchase for cash, or in other words, if instead of cash, if the name is indicated, for example, goods are sold on credit to Bharat, okay, it indicates a credit purchases. Even on credit word is not indicated, but if the name is indicated, it indicates a credit sales. And credit purchases, if goods which is purchased from Bharat on credit, it is indicates a credit purchases. Understood? So see, there is some of the examples: credit sales of goods, credit sale or purchase of fixed asset, return of goods sold purchased on credit. So we already purchased on credit, but now we are return of goods sold, provision of depreciation, and return of bad debts, credit purchase of stock, credit sales or purchase of investment, rectification of mistakes. So these are all the transactions which is coming under the transfer voucher. Understood? So this is a specimen copy or format of transfer voucher. See that name and address of the business firm, date, serial number or the accounting voucher number, and in this we have to, this is a transfer voucher or non-cash voucher. No, in the debit voucher we will debit we will debit the only one account. The credit voucher, what account is to be credited, we will credit that account, which account is to be credited, we will credit the account. But in the transfer voucher, we will debit the account and also we will credit the account. That is called as a transfer voucher. Okay. So for example, if machinery is purchased on credit from Ravi. Okay. So this is the example for this format. See that purchased machinery on credit from Ravi. Okay, so for debit what comes in? Here there are two type of accounts is involved. One is it is a credit purchase. By reading the transaction, we will realize that is a credit purchases. So credit purchases, debit what comes in? Machinery account, and another one is the Ravi account. So we will credit the Ravi account. Understood? So what is the entry? We have to debit the missionary account and we will credit the Ravi account. This is the way we have to make the journal entry, but this is the way. If it is a cash purchases, what will be the entry? Purchase account debtor to cash account. It will debit the purchase or debit the name of the asset, whatever may be. That is, if it is purchased missionary for cash means, if the name of the asset is indicated, instead of purchase, we are debiting the name of the asset. Missionary account debtor. Missionary account is debit coming inside. So we have debited missionary account. What is going outside? If it is purchased on cash, cash is going outside. Credit what goes out. We will credit the cash account. Understood? But in the credit purchases, if the name of asset is not included means, just we will put the purchase account. But here the name of the asset is included. It is the name of the asset is missionary account, but it's a credit. Okay, so instead of crediting the cash, we are crediting the name of the person because it is a credit purchase. So we will debit what comes in missionary account, and we will credit the name of the person because it is a credit purchase. This is the concept. Okay, so in this we will debit the name of the account. It is missionary account. The total amount 80,000. We have to close that. Credit. What is that? Name of the person is Ravi. That is being the missionary purchased on credit. Bill number, amount 80,000 and 80,000 total. And signature of the person who is preparing the voucher in 7. And 8 one is the signature of the authorized person. Understood? It's a very simple one. What is my compound voucher? Compound voucher is a transaction of debit along with the credit and vice versa, and credit also with the debit. That is a compound voucher. Okay, so contains a multiple debit transaction. That is, a debit voucher shall contain multiple debit transaction and one credit transaction, and credit voucher shall contain multiple credit transactions and one debit transaction. It is called as a compound. Compound means several transactions of debit along with the credit and several transactions of credit along with the debit. Understood? Compound voucher is nothing but the several transactions of debit along with one credit and several transactions of credit along with one debit. That is debit voucher. It contains the multiple debit transaction with one credit transaction, and credit vouchers contain multiple credit transaction with one debit transaction. It is called as a compound voucher. Understood? So see the sum. It's very simple sums. Vouchers. This chapter is a very simple sums. Prepare a debit voucher for the following transactions which took place in Montauk Stationery. See, there is a two type of transaction. 2018 date January 4 particulars and amount bought. That is a debit vouchers. By seeing the debit voucher heading indicates the cash payment. We have to debit the account. Understood? Debit voucher is we have to debit the account. See the first transaction. Bought 1,100 pens for, this is the memo number, means it's a supporting voucher number. Okay, 11,000. So see, put the heading, name of the company, date, voucher number 1. This is the voucher number 1. Understood? So here there is a revenue stamp column, debit. See here, bought 1,100 pens for cash. So for cash, this is a cash payment. Understood? So pen is coming inside and cash is going outside, so it is a cash payment. So we can also written purchase account or pen account, whatever may be, it is correct only. Okay, understood? So we can debit purchase account or pen account, whatever may be. So we are purchasing. Bought means purchasing transaction. It is a purchasing transaction. So we are, what is the journal entry? Debit, purchase account debtor to cash account. Purchase account is to be debited, and the credit what goes out, cash is going outside, so we are crediting the cash. But in this debit vouchers, we will debit the entry, that account only. So purchase account is debit, write the amount, and in bracket you have to write the description of the transactions, the details of the transaction, and write the total amount, signature SD accountant, SD manager, as per the format. And as per the format, you have to do the received revenue stamp, like that. And see the second one, salary paid for the month of December 2017 to the assistant accountant 8,000. So what is that transaction? Salary paid. So what is, we have to debit the salary account and we have to credit the cash account. So debit all the expenses. What is the name of the expenses? Salaries. And credit what goes out? Cash. So the debit, we are debiting the salaries account. Okay, so debit salaries account and write the description in the bracket, being the salary paid to the assistant accountant, put the date, put the company number, voucher number 2, amount, SD accountant, name of that SD manager, and as per the format write the revenue stamp. Okay, so very simple one. Just try to do the first sum, second sum, and credit voucher. Just to try to do. So all the vouchers you can able to do. It's sixth problem. Up to the sixth problem you can do. First two problems are relating to the debit vouchers, and third problem is relating to the credit voucher. Credit voucher is nothing but the cash receipt. Understood? So you have to know which account is to be credited. So you have to analyze. We already studied in the last chapter itself how to analyze the transaction. How many accounts are in that each transaction, and which account is to be debited and which accounts will be credited. What is the type of the account, whether it's a real account or real account, personal account or nominal account, and we have to apply the rule, and what account types of account is in that transaction, and which account is to be debited and which accounts will be credited. We already studied all the details, but how to analyze the transaction. We studied all that particulars in the last chapter itself. So by reading the transaction, you have to analyze whether it is the, by credit voucher is nothing but the cash receipt. Okay, cash receipt. So it's very easy. So you have to which account is to be credited. This is the main one. Okay, so just to try this. And problem 4 is also very easy, credit voucher. And fifth is the fifth sum is the transfer voucher. Transfer voucher is also called as a non-cash voucher. That is, it indicates but in this transfer voucher, the both debit and credit will be included. That is the changes. Debit voucher, only the debit will be indicated. In credit voucher, only the credit will be indicated. But in the transfer voucher, that is a non-cash, only the credit transactions will be included, and we have to include both the debit and credit in the transfer voucher. This is the differences. So there is totally 6 sums relating to the debit voucher, credit vouchers and transfer voucher. Try to complete all the 6 sums. It's very easy. Okay, and in the practical questions also it includes 8 type of sums, that is debit voucher, credit vouchers, and so just try to do the illustration sum. Okay, it's very easy sums. It's very, if you are thorough in the format and analyzing the transactions, it's very easy one. Try to finish the 6 problems, the illustration problems. Afterwards we can complete the practical problems. Okay, so just to complete the 6 problems, first you start with the put the heading of the chapter, and no need to draw the specimen copy of the supporting vouchers. No need that, it is only a theory part. Put the heading vouchers. In the vouchers, draw the flow chart of types of accounting vouchers, and start with the heading of cash vouchers, debit voucher. Draw the format of the debit voucher and put the heading of credit voucher. Draw the format of credit voucher and put the heading non-cash voucher, and draw the format of the transfer voucher, and then start to prepare the problems and complete the 6 problems in the illustration problems. Okay, thank you students.